Thank you all for joining the Understanding Your Pension webinar. Today, we'll cover these areas to give you a high-level overview of your Wise Trust pension. We'll talk about what a defined pension plan is, how it works, and how to build your pension. We'll talk about retirement, survivor benefits, the online self-service pension tool called My Pension Resource, and we'll also cover the impact that certain life and career events have on your pension. We'll end with providing you some helpful tips and resources where you can get more information. Wise Trust was created a few years back when WSIB Employees Pension Plan converted from a single employer sponsored pension plan to a jointly sponsored pension plan where the joint sponsors, WSIB and the Ontario Compensation Employees Union, appointed Wise Trust as the administrator of the plan. Our sole purpose is to administer and provide pensions for more than 10,000 workplace insurance and safety workers in Ontario. The members of our plan include active, deferred, and retired former employees from our 6 participating employers: the WSIB, the Infrastructure Health and Safety Association, Workplace Safety North, Workplace Safety and Prevention Services, and the Public Services Health and Safety Association, and Wise Trust Pension Plan. Wise Trust provides you with peace of mind, knowing that when you decide to retire, you'll have a secure monthly pension for your lifetime. The Wise Trust plan is a defined benefit pension plan that offers security and predictability today and a stable retirement income you can count on for life, even if you live to be over 100 years old. This means you're able to better predict upfront what your monthly pension from the plan will be when you retire. And the longer you're an active contributing member of the plan, the greater your pension benefit will be. You won't have to worry about investment decisions, stock market returns, or fluctuations, or base your retirement plans around market performance. And once you retire, you'll receive monthly pension payments for the rest of your life. You'll have the security of knowing that you won't outlive your pension. Plus, our plan also provides survivor and inflation protection. We'll get into these details of these very valuable benefits later in the presentation. Membership in our plan is mandatory for permanent employees. All full-time and part-time permanent employees are automatically enrolled into the plan on their first day of employment, provided they meet the minimum hours or earnings requirements. If you're a temporary employee hired on a temporary contract basis, joining the plan is optional, where you may elect to join the plan after completing 24 months of continuous employment. Since joining the plan is not mandatory for temporary employees, enrollment is not automatic. So approximately 6 months prior to your 24-month eligibility date, our Wise Trust Pension Contact Center will send you an enrollment package. You need to complete the enrollment form, sign and return it before your eligibility date. And regardless of whether you're a permanent or temporary employee, once you become a member of the plan, membership continues for as long as you remain an employee of one of our participating employers. And once you're enrolled, you'll receive a welcome package from the Wise Trust Pension Contact Center. The package includes the pension plan guide booklet that outlines important details of the plan and a special declaration and beneficiary designation form for you to designate your pension beneficiaries. You'll also receive a notification inviting you to register for My Pension Resource, our secure online member site where you can view your personalized pension information and access self-serve pension tools that will allow you to estimate your future pension, initiate your retirement, and much more. If you have been hired recently and have not yet received your welcome package, please contact the Wise Trust Pension Contact Center, and we'll share the contact information with you at the end of the presentation. As a Wise Trust plan member, you're planting the seeds for a more secure financial future. We all know how important it is to plan for the future, but with so much to think about every day and the unpredictable twists and turns that life can throw at us, it may feel like saving for your retirement is impossible right now. But your Wise Trust plan makes that possible. And you're not saving for retirement on your own. Your employer also makes contributions towards your retirement. Let's start by looking at the contributions you and your employer make to the plan. Then we'll look at how your pension benefit is calculated and the ways you can continue to build up and maximize your pension. As soon as you've enrolled into the plan, both you and your employer start making contributions that are paid into the pension fund, which is invested and managed for the long term by our investment professionals on behalf of all members. You contribute a percentage of your pensionable earnings based on a set formula, and these contributions are deducted from your biweekly pay, and they're also tax deductible. The amount you contribute to the plan each year is based on the formula shown here. We will be referencing something referred to as the YMPE, and this stands for the year's maximum pensionable earnings. And this is the maximum salary amount on which you need to contribute to the Canada Pension Plan. And this amount is set out by the government each year. You contribute a certain percent, so percent A here in the graphic, of your pensionable earnings up to the YMPE, and a slightly higher percent, which is percent B, on the portion of your earnings above the YMPE. Here's the current member contribution rate formula as of July 1st, 2025. You currently contribute 8.8% of your pensionable earnings up to the 2026 YMPE and 10.6% on the portion of your earnings above the 2026 YMPE. When we converted to a jointly sponsored pension plan on July 1st, 2020, member contribution rates have gradually increased on a fixed schedule each July 1st by 0.6% of pensionable earnings and will continue to do so until the funding for the plan reaches a joint 50-50 employer-member cost-sharing ratio. Employer contributions, on the other hand, are determined by actuarial valuations in accordance with legislative requirements. These valuations are prepared by our external actuary to monitor the funded status of our plan, and they establish the contributions requirements, which is done at least once every 3 years when the valuation is filed with our regulators. Right now, our employers currently pay the balance of this cost until equal cost sharing is reached. As of July 1st, 2025, the employer contribution rate is approximately 11.1% of pensionable earnings. What this means is that for every dollar that you contribute to the plan, your employer is contributing $1.18 on your behalf. Plus, employers pay an additional amount to pay for plan expenses. This rate will continue to be adjusted as we reach equal cost sharing. There are two main components in the plan's formula used to calculate your lifetime pension: your best average earnings and pensionable service. Your best average earnings is based on your highest average pensionable earnings over any consecutive 60 months during your last 120 months before you retire. Although the best 5 years of earnings are often your last 5 years, that's not always the case. If you decide to take a lower paying job in the years just prior to retirement, your pension would not be negatively impacted. We would use the best average earnings that took place earlier to calculate your pension. Pensionable earnings is essentially your base pay. It doesn't include things like overtime pay, irregular hours premiums, job differential pay, pay in lieu of benefits, or performance bonuses. A full listing of what is and is not included in pensionable earnings can be found on our website or in the Wise Trust Pension Guidebook. Your pensionable service is the total years, months, and days of service during which you or your employer on your behalf contribute to the plan, and this can include any eligible periods of service that you purchase or transfer in from another pension plan, or periods that you are receiving short-term or long-term disability benefits from your employer's disability plan, where you or your employer are contributing to the Wise Trust plan for these periods, or periods where you receive benefits from a WSIB claim, again, where you're contributing to the Wise Trust plan for that period. Here is how these components, the best average earnings and pensionable service, come together when calculating your pension benefit from the plan. Here's how your lifetime pension is calculated at age 65. It's 2% times your best average earnings times your pensionable years of service minus 0.5% times either your best average earnings or the average YMPE, whichever is less, times your pensionable years of service. Again, the YMPE stands for the year's maximum pensionable earnings, and this is an amount that is set out by the government each year. This will give you your annual lifetime pension amount that is payable at age 65 or your normal retirement date. If you have part-time service, your pensionable service during that part-time period is calculated as a proportion of the pensionable service that a full-time equivalent employee would earn. But to note, working part-time does not reduce your best average earnings, as we always use the full-time equivalent earnings to calculate your pension. In general, by working and contributing to the plan longer, you get more pensionable service and potentially higher earnings, which increases your overall pension in retirement. Now that you know the importance of pensionable service in determining the amount of your pension benefit, let's talk about how you can ensure you're maximizing it. During your employment, there may be times when you take a leave of absence, like a maternity leave, or a leave due to an illness or disability. Or there may have been a time when you worked for a participating employer but weren't a member of the plan at the time. As a result, there could be gaps in your pensionable service when you weren't contributing to the plan. Purchasing those eligible employment periods is another way to increase your overall pension at retirement. Listed here are just some of the more common employment service periods that are eligible for purchase. The cost to purchase depends on the type of pensionable service and also when you're purchasing it. For certain unpaid leave purchase types, if you initiate the purchase when you return to work within a specified deadline, the cost to purchase is the contributions you would have made during the leave period. Other purchase types may require you to pay both your contributions and the employer's contributions, or the actuarial present value. It's important to note, however, the longer you wait to initiate any purchase, the more expensive the purchase may be. It's also important to note that purchases can only be made while you're an active member of the pension plan, so you'll need to initiate it before you retire or before you end your employment. And once you submit your retirement or leave your employer, the option to purchase pensionable service is no longer available. We'll show you later in the presentation how you can view these periods of service you have available for purchasing, as this is a key feature on the My Pension Resource self-service portal. You may have worked somewhere else where you were earning a pension benefit under a former employer's pension plan. In that case, you may be able to transfer the value of your pension earned in the former employer's plan into our plan. Consolidating your pension into one plan is another way you may be able to increase your pensionable service under the plan and may increase the overall value of your pension at retirement. There are strict deadlines involved in this transfer process, so reach out to the Wise Trust Pension Contact Center for more details and to see if you're eligible. So now we'll talk about retirement. Choosing when to retire is an important decision, and your Wise Trust pension is only one piece of the puzzle. Other sources of income, like government benefits, such as the Canada Pension Plan or CPP, other retirement savings, and retirement lifestyle choices all need to be considered. The right time to retire will not be the same for everyone. Your unique personal circumstances will help to determine when the right time is for you. And a key first step is taking the time to learn about your pension and the important role it can help and play in helping you build financial security for your retirement. So let's start by reviewing your retirement options under the plan. You have the flexibility to start receiving your lifetime pension as early as age 55 or as late as age 71 or anywhere in between. The choice is yours. You can retire at age 55, but you can also let your pension grow by continuing to work until you're ready to retire. Different retirement dates can impact your overall pension amount, with factors like your age, service, and other considerations playing a role, so it's important to understand each of these options. You can retire with an unreduced pension on or after your normal retirement date, and your normal retirement date is at age 65. Or retire with an unreduced early retirement pension once you've met the plan's eligibility rules, which are Factor 85 and the 60/20 rule. Or if you haven't yet reached your earliest unreduced retirement date, you can retire with a reduced pension that can start as early as age 55. We'll look at each of these options in more detail. The first day of the month following age 65 is what we refer to as your normal retirement date, which means you're eligible to receive an unreduced lifetime pension that's calculated in accordance with the plan formula. If you want to continue working beyond 65, your pension will continue to grow until you do retire, or if earlier, to the end of the year in which you turn age 71, when you're required to start your pension, even if you continue working. You can choose to retire earlier than age 65 without any reduction to your lifetime pension if you qualify under one of these early unreduced retirement rules. Factor 85 is when your age, when added to your years of membership or pensionable service, equals at least 85 points. So for example, you can retire as early as age 53 if you have 32 years of pensionable service. The 60/20 rule is when you're at least 60 years old and you have at least 20 years of pensionable service in the plan. The date at which you first become eligible for an early unreduced pension under the plan is typically referred to as your earliest unreduced retirement date, and you can find that date along with other key dates on your annual statement that you'll receive every year in June. Similar to your normal retirement date, if you want to continue working beyond your earliest unreduced retirement date, your pension will continue to grow since you'll earn additional pensionable service. If you don't qualify for an unreduced pension under Factor 85 or the 60/20 rule, you can still retire anytime after age 55. However, your lifetime pension that you've earned to that date will be reduced by 3% for each year that you retire prior to the date you would have qualified for an unreduced early retirement or turned age 65, whichever is earlier. This is to reflect the fact that you're starting the pension earlier and will receive it for a longer period of time. So for example, if you retired 2 years prior to your unreduced retirement date, your lifetime pension would be reduced by 6%. So that's 2 years at 3% each, which represents 94% of your pension. Again, this reduction is made to reflect the fact that you're receiving it longer and that you're receiving your pension payments 2 years earlier. If you retire before age 65, you'll receive a temporary bridge benefit that's paid monthly in addition to your lifetime pension from the plan. Your bridge benefit will continue to be paid until age 65 or until you pass away, whichever occurs first. The bridge benefit helps level your income until age 65 when you can collect an unreduced pension from the Canada Pension Plan. The bridge benefit doesn't stop if you take your CPP benefit early, as there's no impact on your Wise Trust pension. CPP benefits and pension benefits paid from our plan are completely separate and independent of each other. To illustrate your Wise Trust pension benefits, you'll see here that if you retire early before age 65, you have 2 parts to your pension paid from the plan: your lifetime pension and a temporary bridge benefit. Your lifetime pension and the bridge benefit will both start on your early retirement date and will both continue until the first of the month in which you turn age 65, which at this point, the bridge benefit stops, but your lifetime pension will continue to be paid for the rest of your life. If you retire after age 65, there is no bridge benefit payable. An important key feature of the plan is inflation protection. When you retire, the negative impact of inflation on your pension will be partially offset by the plan's inflation protection, which will help your pension retain its purchasing power while the prices of goods and services increase over time. Once you retire, every January 1st, your pension will be inflation adjusted, or what we refer to as indexation, based on a formula set out in the plan. Next, we'll talk about another really important key feature of the plan: survivor benefits. Survivor benefits help provide financial security for your loved ones, whether you pass away before or after you retire. This benefit is provided to you at no additional cost and is available to your eligible survivors. The type and the amount of survivor benefits provided under the pension plan depend on whether you have an eligible spouse, as defined by the plan, or eligible dependent children, and whether you've started receiving your pension when you pass away. First, let's look at the definition under the plan for the 3 types of survivor beneficiaries and who qualifies under each. The first is an eligible spouse. Under the plan, this is defined as the person you are married to, or if you're not married, it's the person you've been living with continuously for at least 3 years, or less than 3 years if you're the parents of a child. The second type of survivor beneficiary under the plan is an eligible child. This is where you're a parent of a child who is either under the age of 18 or 18 years of age or older, but less than 25 and attending full-time school, or 18 years or older and has a physical or mental disability that prevents them from earning a living. And the third is a designated beneficiary who may be eligible for benefits under the plan. A beneficiary can be a person, such as a child, or an organization, such as a charity. If you choose to name multiple beneficiaries, any death benefit payable to the beneficiaries will be split as per the allocation on your designation form, or divided equally among your beneficiaries if there is no allocation provided. If you don't designate a beneficiary, or if your beneficiary passes away before you, any benefits payable when you pass away will go to your estate. That's why it's so important that you review your pension beneficiary designations on a regular basis and update them as necessary to ensure we have the accurate designations on file for you. We encourage you to visit our website or review the Wise Trust Pension Guide for full description and definition for each of the beneficiary types. Here's a high-level look at what happens to the pension benefit you've earned if you pass away before you start your pension. You will see that the options differ depending on if you have or don't have an eligible spouse and/or eligible children. In a nutshell, your spouse is always first in line to receive a pension benefit, and the options they have are to receive an immediate or deferred pension, or take the lump sum commuted value of your pension, which can be transferred to their RRSP. The plan will then look to see if there are any eligible children that may be entitled to a benefit. There is a lot of information here, so we won't be going through each section, but further details can be found on our website, along with a copy of this presentation. And here's a high-level look at what happens to the pension benefit you've earned if you pass away after you start your pension. Again, you will see that the options differ depending on if you have or don't have an eligible spouse and/or eligible children. Something we'd like to point out here, if you pass away after you retire, it's the eligible spouse at retirement who remains entitled to the survivor pension that's payable upon your passing, even if you later divorce, separate from your common law spouse, or remarry. There are special rules and guidelines on adding survivor benefits for a spousal relationship beginning after retirement, as they are not funded by the plan. Additional details can be found on our website, along with a copy of this presentation, as mentioned previously, to go over more in depth, and you can always call the Wise Trust Pension Contact Center for more information. We'd like to provide you with an overview of the secure online member self-service site called My Pension Resource. In addition to all the pension-related information you'll find on our website, wisetrust.ca, My Pension Resource is your one-stop shop for your personalized pension information and self-serve tools that are available for all of our members at any stage of their career, even after retirement. My Pension Resource is easily accessed through our website by clicking on the login button located at the top right corner of the homepage. Here's how you can register for My Pension Resource. It just takes 5 easy steps. Go to wisetrust.ca and click on My Pension Resource on the top corner. Click on the Create User link just below the Login button. Enter in your pension ID, your last name, and date of birth, and follow the instructions to create your username, password, and security questions. And for enhanced security protection, you'll be asked to provide an email and phone number for multi-factor authentication. We strongly recommend using a personal email address and not your work email address. And if you have any issues, just call the Wise Trust Pension Contact Center. Once you're logged into My Pension Resource, there's a number of things you'll have access to. You can view your personal account, including your address and phone number on file, and you can update your personal email address here. You can view and update your pension spousal information and designated beneficiaries. You can request a quote to purchase pensionable service. You can run pension estimates using your own up-to-date information. You can initiate your retirement online, send and receive secure messages to and from our contact center, view and download your latest annual pension statement, elect for paperless communication, and access and download the pension guide and forms, and much more. Once you retire, this site allows you to manage and update your personal account information, including your banking information. When you first log in, you'll come to our homepage. Here you will see your pension plan data, such as your date of birth, hire date, and your plan membership date, and you'll have a number of options where you'd like to navigate to within My Pension resource. Under the resources section, there's a number of documents available to you, such as the Pension Plan Member Guidebook, your annual pension statement, and commonly used forms such as the spousal declaration and beneficiary designation form. You'll also find an FAQ section, which has some great pension information, as well as a page for important contacts. If you click on the next icon, the messages icon in the banner, this will take you to the messages page, which is a great employee self-service feature in My Pension resource. Here you can communicate electronically with the Wise Trust Pension Contact Center by sending your inquiry directly to them through the secure site by clicking Create New Message. When you receive a response, you'll get an email prompting you to log in and view the message back here in Messages. And if you've sent messages to the contact center in the past, you'll see that the correspondence is listed here for your reference. The My Contact Information section is where you can view the personal information we have on file for you. You'll see your address, your phone number, and your email address. And if you currently have your work email address set here, we recommend updating it to your personal email address. This way, it will allow us to maintain contact and provide necessary updates to you should you take an extended leave of absence or terminate your employment. You can elect how to receive pension-related material from the Wise Trust Pension Contact Center, and you can do this by visiting the Communication Preferences page. This is also listed under Profile. The default and recommended option is to receive the material electronically via the Message Center, or you can select the option to receive the material mailed to your home address. The beneficiaries link will take you to the page where you can view your eligible spouse, eligible children, and designated beneficiary information we currently have on file for you. To make updates to any of this information, simply complete the spousal declaration and beneficiary designation form found either under the resources section or by easily following the forms link indicated on this page. Send the completed form to the Wise Trust Pension Contact Center by mail or simply by using the secure messages function in My Pension resource. Now, coming back to the My Pension area, you'll find the main self-service functions of this site here. This is where you can run pension benefit estimates, and you can also compare different scenarios and save the estimates that you've run. You can view your pension-related information, and this information is the same what you see on the homepage of My Pension resource. You can view the periods of pensionable service that are available to you for purchase, model your retirement income, and of course, you can initiate your retirement. Let's take a closer look at the Estimate My Pension benefit and compare scenario functions. As soon as you plan for retirement, you'll want to know how much your Wise Trust pension will be. This is where you can get a personalized estimate of what your future pension looks like at any age, retirement date, or a key milestone date, and how it can change based on different factors and possibilities, such as retiring earlier or later, or future salary increases. This tool will give you some insight into when you might want to start your pension. And remember that when deciding to retire can impact your pension amount, so choose your retirement date carefully. You'll see it will also provide some helpful information when deciding which surviving spouse option is right for your personal situation. To estimate your pension, you can choose to input either an age at which you'd like to retire, a specific date that you might have in mind, or you have the option to select quick date. The quick dates refers to your key milestone dates, your earliest retirement date, your earliest unreduced retirement date, or your normal retirement date. Again, the system is smart enough to figure out the dates for you. You can also enter an annual salary increase rate assumption up to 3%. There's also a great new feature where you can change your work percentage and see what impact it has to your pension. For example, if you currently work 100% full-time and you're considering moving to part-time employment, let's say 3 times a week, which is 60%, the estimator tool will project this part-time employment starting January 1 of the following year until the selected retirement date. And the system will automatically default the date of birth for your eligible spouse that is on file, and this enables the tool to show you the surviving spouse options. And if you do have service periods available for purchase and want to know the impact on your pension if you were to make the purchase, you will find the model purchase of pensionable service section further down on the page. Here you can select the periods you'd like to include in your pension estimate. And if you're interested in purchasing the service, simply visit Purchase of Pensionable Service page to initiate the quote. And once you've entered in all your assumptions and selected the buyback periods to include in your pension estimate, click on the Calculate button. Here's what the pension estimate results look like. We've asked for the estimate to be run as of age 55, and in this example, the system calculated the retirement date of June 1, 2038. So this is when the person is 55 years of age. This member also has an eligible spouse, so it details the surviving spouse options, also referred to as the joint and survivor options. The estimated monthly lifetime pension amount that you'll receive as per the elected retirement date or age entered is shown under the U column. And should you pass away before your eligible spouse, the amount shown under the spouse column indicates the 66 2/3 of your lifetime pension amount that will continue to them. And in this example, you'll see that since the member's retirement date is before age 65, the member is also entitled to receive a bridge benefit paid until age 65 or death if earlier. But notice under the spouse column, the bridge benefit does not continue to the spouse if the member passes away first, since the bridge benefit is payable for the member's lifetime only. This tool will also display the higher survivor pension amounts that would continue to your eligible spouse at 75% or at 100%. Notice that the pension paid under the U column is reduced slightly in this example to pay for the higher 75% or 100% pension amount that would continue to your eligible spouse. These options here will be available to you upon retirement, and you'll need to choose which surviving spouse option is right for you and your spouse based on your personal circumstances. These survivor option reductions are based on both your age and your spouse's age at retirement. And note, the reduction will not be reversed if your spouse passes away first. Moving over to the compare scenario page, this is where you can choose up to 3 estimate scenarios to do a side-by-side comparison to see the impact of your varied assumptions. For example, you can compare what your pension would be if you retired at your earliest retirement date, your earliest unreduced retirement date, and your normal retirement date to see the difference in your pension. Or you can compare estimates by entering in different ages or specific retirement dates to determine the impact of retiring 1 or 2 years earlier or later than you originally planned. You can also see the impact of using different salary increase rate assumptions, change in work percentage, or the difference in your pension when you include a period of pensionable service you're thinking about purchasing. As you can see, this is a really helpful tool when planning your retirement. Your pension from the plan is considered taxable income, like most other sources of retirement income like CPP, OAS, RRSPs, and registered retirement income funds. We are therefore required to deduct taxes from your pension payment from the plan based on basic federal and provincial income tax table rules. The pension amounts displayed on the estimator tool are estimated gross monthly pension amounts, unless noted otherwise, as the required income tax withholding has not yet been deducted. If you'd like to estimate the tax withheld from your pension, you can visit canada.ca and search on Payroll Deduction Calculator, which is a tool that estimates the amount of tax that would be deducted from your monthly pension. Once you've made the big decision to retire and you've advised your employer, you can initiate your own retirement. It's fast and it's simple. On the Initiate My Retirement screen, populate your last day of work, and the retirement date will update automatically, which will be the first of the month following your last day of work. Submit your election by clicking the Save and Continue button at the bottom of the screen. The system will ask you to review the information entered, and once that is confirmed by you, the Wise Trust Pension Contact Center will take it from there. You will receive your retirement package in about a month's time. And for WSIB members, you will have an additional option to select from that includes any credits you wish to use to retire with bridging. As you can see, initiating a retirement on My Pension Resource is fast, easy, and it's secure. Next, we'll take a look at some life and career events that may impact your pension, like a relationship change or leaving your employer. Maybe you're getting married or entering a common law relationship. Or maybe you just have questions about what happens to your pension during a separation or divorce. If your relationship status changes and you need to update your personal information or have questions, call the Wise Trust Pension Contact Center. Forms to update your spousal status and designate your beneficiaries, as mentioned previously, can be found on My Pension Resource. You should name a beneficiary and review your designations whenever your personal circumstances change. And as mentioned earlier, your eligible spouse, as defined under the plan, will automatically receive survivor benefits when you pass away. If your spousal relationship ends, your pension benefit may also be affected. Under the Ontario Family Law Act, pension benefits earned during your relationship may be included in the division of family property. What this means for you will depend on your own particular circumstances. Before you divide your property, to start, you'll need to know the value of the pension assets you accumulated during your relationship, and this is done by applying for a statement of family law value. We recommend you get professional financial and legal advice before making any decisions about your pension. Please contact the Wise Trust Pension Contact Center for more information. Another change that might happen in your life is a career change. When your employment with a participating employer ends, your active membership in the plan also ends. At this point, you'll need to decide what to do with your pension benefit. If you're under the age of 55 and not yet eligible for immediate pension from the plan, you'll have three options upon termination, excuse me. You can choose to defer your pension, meaning you can leave your pension in the plan until you become eligible to start receiving it, which can be as early as age 55, but no later than age 65. When you're ready to retire, you'll have the predictable lifetime pension that's adjusted for inflation. You also have the option to transfer your pension value into another plan if you leave to go to another employer who has a pension plan that is willing to accept the transfer. In that case, you will need to contact that plan's administrator for details. And the third option allows you to transfer the value of your pension into a locked-in retirement account where you would then be responsible for investing the funds and taking on the investment risk and any associated management fees. If you choose this option, you're giving up your rights to a guaranteed monthly pension from the Wise Trust plan that's payable for your lifetime and offers inflation protection and survivor benefits. It's also important to note that these funds are locked in, meaning the value of your pension benefit is not available to you as an immediate cash payment. The funds must be transferred to a locked-in retirement savings vehicle that is intended to provide you with a retirement income in the future. That said, the Income Tax Act does limit the amount that can be transferred into a registered vehicle, so there may be a portion of your benefit that is in excess of the maximum transfer value limit, and this excess amount will be paid to you in cash, subject to withholding tax. This cash payment is classified as income and is taxable at your personal income tax rate in the year you receive the payment. This cash payment will also reduce the amount you'll have available in retirement. You should also consider that if you meet the eligibility requirements for any post-retirement group health benefits programs provided by your employer, and you choose to transfer the value of your pension out of the plan, you may no longer be eligible for those post-retirement health benefits coverage. For eligibility inquiries specific to your circumstances, you must contact your benefits and HR departments for more details. As you can see, deciding whether to keep your pension in the plan or transfer it out is an important decision, one with potentially significant financial consequences for your financial future. Given that, we strongly recommend that before making any decision, you seek independent, unbiased advice from a qualified financial advisor who will act in your best interest. We have some helpful information on our website, wisetrust.ca, that can support you and your advisor in that decision. If at the time you terminate your employment, you've reached age 55, or you're eligible for an immediate unreduced pension under the plan's early retirement provisions, you must leave your pension in the Wise Trust plan. You'll be given the choice to either start it immediately or defer it to a later date. Or if you leave to go to another employer with whom we have a reciprocal transfer agreement with, you can elect to transfer your pension benefit to that employer's pension plan. Transferring the value of your pension to a locked-in retirement arrangement account is not available to you at this point. Now that we've covered the plan's key features, we'd like to leave you with a few important reminders as we wrap up the presentation portion of the session. First, always remember to keep your personal information, such as your mailing address and your phone number, updated through your employer. This information is sent to us by your employer to ensure you receive important pension-related information. You can update your personal email directly through My Pension Resource under the profile section of the website we showed you earlier. Keeping your email updated is especially important as we increase our paperless communication efforts. If in the future you no longer work for one of the participating employers and have a benefit that remains in the plan, it's important that you contact us directly to make any changes to your mailing, phone, or email address, either through My Pension Resource or by calling the contact center. We can't stress enough how important it is to keep your spousal and beneficiary information up to date at all times. Review your designations on a regular basis and update the information as needed. You can view your current pension designations on My Pension Resource, and this information will also appear on your annual pension statement that you'll receive in June every year. It's important to note that these beneficiary designations are strictly for pension purposes and relate to your pension benefits only. They're not related to any life insurance that may be offered through your employer. If you need to update your beneficiary information under those benefit plans, you'll need to contact the administrators of those benefits directly. By keeping your spousal and beneficiary information up to date, you'll ensure that any eligible pension benefits will be distributed according to your wishes. And lastly, when planning for your retirement, we strongly recommend getting qualified, unbiased advice to help with your overall retirement plan. A qualified financial advisor can help you determine how much retirement income you'll need to help you meet your retirement needs and goals. In addition to your Wise Trust pension, consider other sources of income, including government benefits like CPP and OAS, your personal retirement savings, or employment income from a part-time job, for example. Consider all your retirement income sources and personal circumstances carefully and obtain estimates before making any decisions. If you have any pension-related questions, please call or send a secure message to the Wise Trust Pension Contact Center through your My Pension Resource account. The Wise Trust Pension Contact Center can also be reached at 1-855-242-1526, and a representative will be happy to assist you. Make sure you have your 5-digit employee ID or pension ID handy when you call. This contact information is also available on our website at wisetrust.ca. For details about the government-sponsored plans and programs like CPP and OAS, including if you qualify, how to apply, and also for estimates, please visit canada.ca or visit Service Canada. And for information on post-retirement benefits or general HR information, please reach out to your Human Resources or Benefits departments for details. Another great resource available to you is our own Wise Trust website. You can find general pension information such as how our pension plan works and what a defined benefit pension plan is, who the Wise Trust team is and our structure, what you need to do to initiate your retirement, view our member newsletters and our webinar repository, register for our upcoming webinars, and so much more. Visit wisetrust.ca today to get started. More information on the plan, including the funded status and investment results, will be available in our 2025 annual report and will be published on our website once it becomes available in June. Thank you all for joining the webinar today.